Good morning to you. Thanks for joining us this morning.
Good morning, Chris. Great to be here.
Yeah, glad to have you here. We're going to be talking about life insurance and some myths and some underestimating, I guess, would be the overall theme, especially when it comes to those blue collar workers, those in specific age groups. And so looking forward to this conversation this morning. And seeing what's happening with State Farm Insurance. I mean, you guys are always busy, very much in the community out there, and all that good stuff. And so, looking forward to today's conversation.
Absolutely.
Let's talk about blue collar workers in general before we
Sure.
even start there, and what we're dealing with insurance that might be significantly different than what we deal with the other segments of the population.
Yeah, I would say that most blue collar workers, there may be a chance that they haven't been explained as well, oftentimes, their benefits at work. And I think it really starts there
Mm.
is what are your benefits at work? And I think so often, we're so and rightfully so have to be focused on the pay and the income that the health insurance, life insurance, other considerations. Yeah, 100% they're important, but they're relatively consistent among larger employers. So
Mm.
if you're a blue collar worker, about half of our workers in our rural Michigan area, they have some benefits at work if they work for a bigger company. However, about half of the blue collar workers work for small businesses and smaller companies and organizations that don't provide, always health insurance benefit or the life insurance benefit. So they've got to figure that out themselves. And that's something that can be very challenging and daunting. Like, I don't even know where to go. Like, I know I have to have car insurance and, maybe renters or if I have a home, but like life insurance, I don't know where to go. So part of this is just brand awareness, conversation, and just educational in that space.
Well, and I remember a previous conversation that we had. You had mentioned that employers, because a lot of cost, are not providing as much, or is that changing? Where does that stand these days?
Yeah, I would say that it's one of those areas that is as employers are looking at being competitive and trying to, make sure that they can provide, competitive wage, they can sometimes scrutinize more on the benefits and do those minimally, but still have them in order to be able to recruit and retain, employees. And
Yeah.
so I would say that what really is just an understanding of what you have. So if you're into the day to day, work hard, you get dirty, sweaty, you're in that's your focus is getting your job, getting out of there and getting to the kids and figuring out what you're going to have for dinner and that kind of a thing.
Mhm.
So I think just realizing that what we're trying to do is just stop, drop and roll, just kind of, in terms of taking a moment and saying, what really is my situation? And I think that's the most important. Each person that's listening now has
Yep.
their own unique story, has their own unique situation and needs. And but there's so much information, misinformation, and just lack of knowing some of the statistics and the facts about life insurance and how it works with work. When you're so concerned about just getting to the job, getting it over with, and moving on for the day.
Yeah. And we put a lot of emphasis on life insurance, and we bring it up on a regular basis because it's one of the most important elements of insurance that we need to consider, that we need to have, because and tell me if I'm wrong on this. I know you've said this in the past, and maybe I won't get it correct, but we get life insurance, not for us, but for those people that we leave behind, for the family members, and that's the big part of it, right?
Yeah, it's living benefits if you look at it this way. I think, we'll have sometimes people say, you know, um, they'll be fine, it'll be okay, have some life insurance at work. And the fact of the matter is most people have one or two times income.
Mhm.
And if you think about it that way, that's just going to provide for a couple of years. So if you have kids at home and family members who rely on your income That's probably the biggest category where there's the most misunderstanding or lack of information that is just not realized in the public domain. They just don't realize, like, oh my gosh, I've never really thought of it that way, where, I've got a 4-year old, a 6-year old, 3-year old at home. It's going to be super hard for my spouse, significant other to maintain their lifestyle at all without my
Mhm.
income.
Do you see
And
that? I mean,
mhm.
is that real? Is it
It's
meaning
real every single day.
yeah,
Every single day there we have a conversation with people, where we're actually just trying to talk it through just a little bit and realize that, yes, it's great you have the benefit if you work for a bigger company and you have life insurance from work, but realize if you make 35,000 dollars a year, $40,000 a year, and you have 80,000 of life insurance, that's pretty good.
Mhm,
But what happens at year 3, 4, 5, and it can become super really challenging for the family to continue on. If you got a car loan, you're renting a place, your family's going to have to move in with relatives. If there's no extra cash, a lot of times the significant other, your spouse has got to go get re-educated on their own money. Maybe go from part-time to full-time. It adds
mhm.
a tremendous amount of extra stress to the family, in helping to maintain the everyday life and the standard of living. It really makes it super hard.
Well, and it's not just in the movies, it's not just in the big city.
Hmm.
It is in rural communities,
It
just like in
is.
Mason and Oceana and Lake counties, Manistee County, and throughout the state that you serve. So you're definitely dealing with individuals that are going through that. A
Hmm.
couple moments ago, you'd mentioned some statistics, or at least some, and we had started the program with the word myths. There's three that are interesting, that we were talking about off the air prior to this segment. Do you mind sharing those with us a little
Yeah.
bit there, and we can kind of break it down?
So adults 35 and under who say that they are healthy overestimate the cost of life insurance by 7 to 12 times. So they literally, not knowing that most life insurance that they get, if they're trying to replace some income or pay off a mortgage if they pass away, for many, 25 to 30, 35, 40 year olds, that can be a policy that oftentimes is, you know, 25 to $50 a month, and they literally overestimate it by hundreds of dollars. There's a lot of people that think, boy, if I got a half a million dollars, that's probably going to cost me, $300, $400 a month. And the fact of the matter is that's not true.
So
We've
their
got a lot of,
perception, right?
yeah, the
Before, yeah.
perception is quite off. Like a half a million for somebody really healthy, could be as low as, $40, $50 a month, and just wow, they had no idea. And I can tell you that that extra half a million, for example, and we're just throwing numbers, right? Just kind of
Mhm.
spitballing, but a half a million is going to make a huge difference. It's not going to make your kids necessarily wealthy or your family, but it's going to allow them to stay in their activities, to stay in their sports, and just realizing that it's way more affordable than what you might realize to have your own policy that you own and control.
Mm.
Okay, so if you leave your job and you go to a different company that doesn't have a life insurance benefit, um, you've got to figure that out. So what's nice is when you're young and healthy and you have a need where you've got a mortgage or you've got kids at home and you got to replace some of your income, it's nice to own and control your policy. And I can help you, my staff can help you at State Farm here on US 10 in Ludington, and help you just, look at your own personal needs and your own budget. And we take the time to do that well, Chris. I mean,
Mm.
we're
Excellent.
trying not to sell you anything. We're just trying to help you and consult you and help you, help you make a decision, help you to buy. We can be the go-to for that space.
Do you mind? Can we dive a little bit deeper into that? So you'd mentioned a few moments ago the 35 and under, and you can get a life insurance policy. And again, everybody's different, but $40, $50, so, somewhere in there. And of course, the other side of the coin, people are saying, well, I don't need life insurance yet. I'm young. Nothing's really going to happen, so and so forth. So I understand that that's going to be sort of the reasoning, which something can happen at any time, no matter what age you are at. But the question I guess I have is this: um, uh, is there so let's say you purchase a life insurance policy in that age bracket, and then under 35. Are you is there a perception or is it reality that eventually the life insurance company is going to come back and say, "All right, now you're in an older demographic and now you got to pay more." Does that happen?
It can. So there's we'll get into the weeds here a little bit,
Yeah.
but a lot of young families want some term life insurance. So what term means? It's a period of time. So literally a 10-year term, a 20-year term, or a 30-year term. What that means, Chris, is for that death benefit that you've chosen based on your budget, is you're going to have, for example, 250,000 or 500,000 or even $1 million of life insurance that you're going to pay the exact same amount for that period of time.
For
So
30
my
years you
rule
can
of,
choose.
yeah, if you can choose
Oh,
those years, my rule
okay.
of thumb is, if you're 35 or under, really try to get the 30-year term.
Huh.
That's going to get you so much closer to retirement. You're locking in your premium at a way lower price if you're 25, 30 years old and you go, well, I don't need it quite right now. I haven't bought a house. Well, let me ask you a question. Are you going to buy a house in the next year or two if interest rates do go down? There's discussion that the
Mhm,
Fed's going to lower the prime rate, maybe as many as three more times over the next year.
mhm,
There is a lot of discussion and seeing in the market that it is softening a little bit, that home prices are coming down a little bit.
mhm, mhm,
So if you're preparing and you're trying to save right now to buy your first home in the next year or two, then what better time and while you're young and healthy to lock in a policy that at some point you're going to have, get that house. Sooner rather than later, even if you adopt, is you're going to have some children. And so granted, 100% more people do the need based on their current need, which I would agree with, right?
yeah,
I
yeah,
have this need and, oh, we're expecting. Okay, well, let's take a look at that and how that might change things. But there are a lot of young, I would say young, informed people that just realize like, I'm heading toward this. This is my goals and my hopes and my dreams is to be working toward getting a home in the next year or two, having a family in the near future. And so locking in that policy now, a 20-year term at the same premium or a 30-year term at the same premium,
mhm,
that locks you in for that period of time. So people ask, hey, what happens after that?
mhm,
Well, there's a couple options. One, you let it renew, but I can tell you, like you mentioned, Chris, it can be
yeah,
a whole lot more expensive
mhm,
without us knowing about your health. You can
mhm.
renew it. It's guaranteed non-renewable or renewable, excuse me.
Okay,
But a
yeah,
lot of times people will look at if they still have a need, into their late 50s or 60s, is we will look at another coverage or policy along the way. Sometime in the next, 10, 20, 30 years, we're going to see what other needs the family has because it changes.
mhm,
So it's not static. We'll have another conversation and they're like, oh yeah, since I got this policy, we bought a bigger house and have two more kids. Okay, well, your $250,000 life policy is probably not quite enough anymore.
yeah,
Let's take a look and try to lock you in at a new premium. You're a little bit older, it's a little bit more expensive, but it's the most economical that it's ever been. We just took a big decrease in term premium, term life insurance premium again. So this is like the third time in 5 years that State Farm has decreased their term life insurance premium.
hmm. So this is good. This is great information that you're breaking down today, and it's information that we can understand, especially if the younger generation. I mean, I'm not putting myself necessarily in the younger generation, but I would think back, 10 years ago or 15 years ago, and think, okay, yes, it's going to be something that I have to add to my monthly budget, but I think the key, very much, that I'll take away from this conversation is if we can lock that in for 3 decades, you're not going to be surprised 10 years from now, 15 years from now, paying double or whatever that amount that is put in front of you at that time is. And it's just like anything. I mean, it's insurance. It's it's where if something happens, you have it, right? I mean, that's the basic principle behind that.
Yeah, yeah. I think what's happening is we are, um, for a lot of reasons, we're living longer, and we've said this for decades, right? We
Mhm,
continue to live longer. But think about if you're, a person listening to this. Think about your parents or grandparents, and you go, "Wow, they are still doing actually pretty darn good for being in their late 70s, 80s, and sometimes even 90s." Chris, I
mhm,
mean, my mother-in-law, who's getting around and phenomenally at 85 years old, has a lady next door that just turned 100.
huh,
And she's going out for walks and bouncing around. And she actually, in her birthday week, had like 5 different parties, my mother in law was saying, and she was invited to 2 of them. But the lady turned 100 years old. So I
uh-huh,
think the point of the matter is that we don't know what's going to happen in our 40s and 50s and 60s. Like for me personally, is I didn't know I was going to buy a new building and take on $100,000 more in debt.
mhm,
I didn't know I was going to build a different house, and take on some more debt there at 52 years old, which I'm working to get rid of because ultimately I would have been out of debt at this stage of life. But I'll tell you what I did, Chris. I did a 20-year term at age 35. Dang, I wish I would have done a 30-year term.
yeah, yeah,
Locked in the premium for 30 years and at age 35, and it would have been perfect. But what I needed to do, basically when my 20-year term expired here about 7 years ago, is I needed to get some more life insurance at age 52.
mm,
So my recommendation is go as long of a term, if you're looking at that, as you can. I also love having some permanent life insurance for when the term expires, and that may confuse some people, but you can actually get policies that have coverage for when you don't have the kids living with you anymore and the mortgage is paid for. But it's really nice to have tax-free benefits to the beneficiary when you pass. Just remember, IRAs, 401ks, those are taxed to everybody except the spouse.
okay,
Okay, so you take in some money from your parents on their IRA, is that is taxable. But life insurance beneficiaries, life insurance proceeds are not taxed.
all right, good
Very
information to know.
powerful to know.
Yeah. We're if you're just joining us, we're talking with Erin Doan from Erin Doan State Farm Insurance. We were talking about some statistics, and then I want to wrap back around to that focus on that blue collar worker as well before we wrap up. But I saw another statistic: 61% of those who don't have life insurance say they need it. So, are you saying that they understand that it's important, but just not taking the next step? And if that's the case, why?
Yeah, it's probably, I think in general, if I was, asking me that question, kind of thinking about the society or the population as a whole, I would say that most people say, I have some coverage. I got it with a company, insurance company, and I own the policy. I have some benefits at work. I think what I would really look at it is that oftentimes the biggest need that people are not realizing is replacing income. And people go, well,
Mm,
why? Well, because it's a bigger asset than your home. If you make $50,000 a year for 40 years, that's $2 million, if I do the math right, of income in your lifetime. That is your biggest asset, is replacing that income.
mhm,
And so if you want, the kids to maintain their lifestyle and to be able to do the activities and sports you want them to do, even if, let's say that something happens to both of the parents, at least grandma or an aunt or uncle will have some money to be able to, have some extra gas money. They're going to go, drive down to Muskegon and, have a high school game. They can go out to dinner and have just some extra cash, taking care of your kids, and replacing some of that income that you had that's going to be super powerful. So I think it's more of just an understanding that I've got some at work. I got this
mhm,
policy that I got, I don't even know, 12 years ago from this company, so I have enough. The
mhm,
question is, well, when we do a life needs analysis and we go, well, how many years would you like your income replaced? Well, let's see. My oldest is 5. Would you like him to make sure they have income through high school, or maybe your income through college so you can send them some money, even if you don't pay for all of their college, at least you have some extra money to be able to support them, maybe
Yeah.
help them pay their car insurance. And when you talk about those things, they go, well, they're 5. No, I'd like it to probably be at least, 10 years. That'll get them to 15 into high school, but actually better, I'd rather it to be, 20 years, to be
Hmm.
25 years old, know that they're on their own, doing fine, finding a job, and more kids are staying at home just to be able to save expenses. So I think that's the mentality. It's like you want 20 years of replacing your income.
Hmm.
Okay, so just understanding that, that could be as much as $1 million of life insurance, and like, oh my gosh,
Yeah.
wait, I already have a $250,000 policy and I have $100,000 at work. That's 300,000. You're saying I need 1 million? If
Hmm.
you want to replace your income, for at least 20 years, that's probably what you want to look at.
Yeah.
And what's powerful about that is that's going to provide some money even when your kids are gone to your spouse, significant other, and allow them to, maintain the lifestyle, stay in the home, especially if they don't remarry or, are with somebody else, they still have that money. And again, 300,000 of life insurance could be really good, but everybody's so specific. It depends on the person and their own needs and their own budget. And we work really hard to not sell anybody anything, but just ask really good questions and just help people realize that income replacement is hugely and probably the reason for that statistic is
Yeah.
they're not considering income replacement.
With with social media out there, and we're streaming this on our YouTube and our Facebook pages right now, and the information that is all around us, a good majority of people are finding information online. Uh, can it be good? Can it be bad? What's your thoughts there?
Yeah, I think it's a matter of just knowing that if that's where you're, going to do your homework and research, kind of look at the company in terms of, what are they actually posting, in
Mm.
terms of that insurance agency, and does it look to be like something that you relate to or you can understand? And I think it just helps you get awareness of, who in the marketplace is doing this when you see that, we post on our Facebook and Instagram pages, this being Life Insurance Awareness Month, the month of September for the
Mhm.
entire country. For all life insurance companies, we are, focusing, and we focus every year in September on Life Insurance Awareness Month. So just making people aware when they're looking at social media posts, is this a company that I would like to do business with? Can I see myself at least having a conversation with, Aaron or somebody on his team about my needs? It's a personal thing, right? We're
Mhm.
we're
Mhm.
and we're talking. I get it. People go like, well, wait, you're talking about my death and demise.
Yeah. Yeah.
Yes, but we're more talking about your family and
Mhm.
helping them to continue on if something, heaven forbid, happened to you.
Yeah.
We all only have so many days or weeks or years on this planet, so we want to make sure we're taking care of our families the best that we can. And I just highly recommend you to look at your own situation every 2 or 3 years minimally because it does change and your needs do change. And sometimes as you get older, is you can reduce coverage. We have policies where people go, hey, I don't have as much debt. I had another kid go out on their own. They got a great job. They've been out of the house for now a year. I want to reduce my coverage.
Mm.
Okay, let's
Mm.
take your life insurance down. We have policies that can do that as well.
Okay. All right. Good information there. We started this conversation talking about blue collar workers and the importance of having life insurance. There's six items there that we want to hit on before we wrap up that are reasons for those blue collar workers, and we've touched on a few of those. But do you mind recapping a little bit and going over those before we wrap up today?
Absolutely. And just try to hit the highlights on each of the six. So, why do you need life insurance if you have life insurance already at work? Many blue collars do. If you work for a large company, if you work for a small company, as we mentioned earlier, most people do not own their own life insurance.
Hmm.
So, the biggest number one is financial protection for your dependents. your significant other, your spouse, and your kids, making sure that you, if you're the primary earner in the home, that they can maintain their standard of living,
Mhm.
helping replace income. Number two, if you have car loans, credit card debts, mortgage, that is going to be transferred oftentimes to somebody else if you have a joint accounts,
Yeah.
and they're going to be responsible for that mortgage. So having money to pay the mortgage off, pay your car loans off, is a big reason in the blue collar worker space just to realize that the life insurance you have at work, if you have some, isn't always enough to cover your mortgage. That's huge. So as we talked about income replacement a little bit earlier, but it's just to help you stay afloat financially. That's number three.
Mhm.
Number four, covering your funeral and medical expenses. Again, if nothing else, if I can get into this point where I'm talking to a 25 or 30-year-old, if you're listening right now, just realize that your parents or somebody is going to have to pay for your covering your funeral and medical expenses.
Mhm.
If you came to us and say, I'm not right now wanting to get insurance on replacing my income, I don't have anybody that relies on that.
Mhm.
I don't have a house yet. Okay, how about if you will, adulting and taking care and having a small policy, maybe a whole life or a universal life policy, which we can explain to you, and having 25 or 50,000 of coverage so your family can take care of your final expenses in your funeral.
Mhm.
That's
Yeah.
number four. That can be huge. Number
Mhm.
five, peace of mind. Just knowing in your heart of hearts as you're going to work and you're doing your day-to-day thing is like, again, heaven forbid something happens to me, I know I have peace of mind. It gives you less stress in your situation. I can tell you when you have emergency savings and you know you have life insurance that you own and control, that's going to give you peace of mind for your family if the unexpected occurs. And I think the last thing, number six, is super powerful. It's the children's future. I always call it if you pass away without good life insurance, it's adding injury to insult. So, what's the injury? Well, the injury is just not being able to continue on and being able to reach your kids' dreams. It's not necessarily paying for all their college, but having the opportunities to do things because they have some financial extra money to be able to take care of things. So, supporting your children's future, if they're still at home and you're still financially helping them, it's going to help their future education. It's going to help them stay on track to getting a good job. Um, as a lineman working in a factory, doing whatever it is that they will do or hope to do in the future, having that money from life insurance, tax-free benefits is going to be huge for the kids' future.
Yeah. I'm glad you went over those points here at the end because it kind of brought everything together that we talked about today. And if anybody has additional questions, they can certainly reach out to your team, as you mentioned, and they want to do that. They want to be able to have that conversation because one of the questions I didn't ask you that fit right into those points was that 35 or under or anybody out there that's not married that doesn't have kids, they're going to say, well, I don't need life insurance. It's they're just talking about it for the benefits. But you're talking about for funeral cost and for medical bills, because ultimately you're responsible for them. And if you're if you're married or you have kids, somebody's going to be responsible for them. So
Yeah,
uh,
it's just nice not the family not to have to worry about a GoFundMe account,
yeah, yeah,
right?
yeah,
Or a spaghetti dinner. I think it's very mature and wise. We're all trying to understand our crazy world a little bit better and do the best we can in this space. And this
yeah,
is one of those areas that it just makes good sense. What's a good family business practice in terms of running your own family business? In terms of just even personally, I'm not talking about having a family business, but just
yeah,
what's a
yeah.
good financial decision? Well, it's protecting, right? So protect your family's interests of what you have and love and hold dear. Take a moment and think about that and why that's important, and then act upon it.
Yeah.
We're going to make it as easy as possible, explain it as best as we can to help you understand and do something that we would do for ourselves and our own families and our own kids in terms of, recommending a solution that fits your budget. So we're super focused on your budget and making sure that this is a policy you can afford to keep,
Hmm.
because just getting it and then dang it, having buyer's remorse and spending too much doesn't help you at all with your family going forward if you get it and then you just cancel it. We want to help you maintain it and make sure it's affordable.
For sure. And they can do that by reaching out to you, and how can they reach out to you?
So I'm the State Farm agent, 22-year agent for State Farm now. It's going to my 23rd year. We're on US 10, half a mile east of Meyer in Ludington. And you can reach us there, walk in. I have licensed staff, including myself, that is available 9 to 5, Monday through Friday, and by appointment. You can also find us at ludingtoninsurance.com. Or if you want, pick up that cell phone, that smartphone, and dial 231-757-3115.
All right, great information there. And Aaron, I will tell you this one thing that I was able to observe is your complete setup, with Jake in the background and the quality of your video. Where we started with the split screen and
Oh,
remote
yeah.
video, it was rough back then, and from our side with technology, but you have your video is great, and the whole State Farm approach in the back is looks phenomenal.
Great.
It
Thanks,
looks
Chris.
phenomenal.
Appreciate it.
Absolutely. And if anybody missed any part of this topic or information today, you can visit our YouTube channel. You can visit either of our Facebook pages, the WMOM or Hot Country Hits Facebook page for more information there. But more importantly, reach out to Aaron Doan and his team at State Farm Insurance. Aaron, thanks for chatting with us this morning.
Thanks, Chris. Have a great day.
You too. It is 102.7